Hey guys, welcome to another Tradgenius podcast. Bob and Phil here. As always, guys, CPI numbers came in and it was soft. Is inflation over? Well, we're going to talk about that and talk about why the market sold off today. Let's dive in.
Tradgenius.
All right, Bob. So I don't know if we've seen the inflation numbers this soft in, well, I don't know, years maybe.
Yeah, I mean, if you set COVID aside, which was like kind of a forced depression, I don't think we had negative print since the great financial crisis. I'm sure somebody here will look it up, but numbers are getting really soft. And I personally believe this is a pause that refreshes because the Fed and everybody and their brother are going to come in and spend like maniacs. But this gives the Fed and the government room now to start cutting rates, Phil. So we had, per year view on this stuff is that we've had the unemployment tick up. Maybe it's enough. We've seen the data that tells us when it crosses that relative strength area that we can expect a rate cut. And now we had CPI come in with a negative print. And we have a July Fed meeting coming up at the end of the month. A lot of people are still not expecting anything to cut in July. Phil, everybody's saying September. I think I could say now with confidence September rate cuts in the bag, and now we'll see how much they agitate for a July number. Look at these prints, though. I mean, I wish I could get paid for being wrong like these forecasters do.
Right.
Just amazing to me. I mean, the standard deviation of their accuracy is just amazing. So what do you think about all this?
Well, I think actually that we're going to see inflation tick back up, but it'll be toward Q1 of next year. I think it's going to be when we get into this bad news is bad news phase for the market. I think that's going to rear its ugly head, and there's not going to be any relief in sight for this market, and it's just going to feel like we're in the big bear at that point. So it's very bullish now, and I think it plays into the scenario of we kind of push up and maybe we blow off into the election, but push up over the next few weeks anyway, and then once that plays out, I think you're going to have that pullback in the market. And this compounds by going back up. Fed's in trouble. Ultimately, it all culminates in another round of printing. But, that probably isn't something we have to deal with until we get toward the end of 2025.
Yeah, I think it's a 2002 scenario personally. A lot of other things are setting up that way where the rotation's going into energy, gold, uranium, and they're all popping. I mean, I had a great day today because I wasn't into stuff that got sold off, so, and we knew this too. We were laughing yesterday when the market popped ahead of the CPI number.
Yeah.
And you made the comment, well, somebody already knows the number. And what they do today, they round tripped it. And so many people were so frustrated, said, why did the market sell off on such dovish news? Is because it popped yesterday.
Right.
And what really interesting to me is the market really gave it no credit whatsoever because I just pretty much just washed those 2 days away. It's really going to be interesting for me to see what happens now in the OPEX. I still personally feel the July OPEX is almost invariably bullish, Phil. And Thursday and the Friday of the week before OPEX is usually bullish. And so we get that reading, Friday up, then we know Monday, Tuesday is going to be up too. And then you usually get a lot of the chop then towards the end of the week. So I still think that's going to happen. I mean, you look at the way some of this stuff popped this morning and look at Bitcoin. Bitcoin's like a jiffy popper. I think what's happening now is that, guys that have been shorting this thing are trying to contain the magma lava lake that's ready to go. And I think once more and more of those shorts keep covering, then there's going to be no excuse for the market to stay down and it's going to pop. And so that's what I'm watching. Everybody, is Bob with Tradgenius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it, and we'd like to see you in the room. Thanks for listening. And I threw in our chart up just for people interested to see what the components were on the CPI. I'm not going to read this stuff off to you, but some of the stuff's a joke. Like you have airfare down 5%. I want to just let people know the only inflation you should care about is how much it costs for you to eat, how much it costs for you to live, how much it costs for you to energize and transportation for your home. What's insurance costing you? And pretty much that's it. Everything else is a nice to have. Inflation and deflation can do whatever it wants. I've been expecting this, Phil. The tighter the core inflation holds, the worse the deflation is going to be on the other stuff. And I think Delta Airlines had a bad print today. Pepsi, people think, Pepsi beverage, that's defensive. Well, it's soda. You don't need soda. And Pepsi came in soft. So I just think that that's what we're seeing here. I think we're going to see this. The rally is going to be around the things you have to have, and they're going to hold their pricing. And then the things you don't necessarily need, they're going to lose their pricing. And so that's why, you want to stay long Bitcoin, you want to stay long energy, you want to stay long food stocks. And even apartments now are starting to wiggle a little bit because, you don't have to live in some of these buildings and you don't have to live in some of these cities. So it's really going to be really interesting to me. And I think the Fed has no answer to what's happening here now because it's not giving them a straight across the board signal.
Yeah, and the other thing too, Bob, we were looking at the institutional flows, kind of doing a review and posting notes in the VIP room, and it was obvious to me that we were seeing rotations into energy. Energy was doing well today. We were seeing money come out of hotel and leisure categories, right? I think the big money is not really looking for much more upside into that from here. And for reasons that we've shown you guys, just, the underlying metrics in the economy are not good. So hotel and leisure are going to get hammered probably going forward. And also in bonds, we saw rotation, more money going into bonds. So I think for having the thesis of, they're going to run this up, I personally now think because of the rate cut probabilities after today's print, I think we are basically looking at a market push up into the first rate cut. Similar to what we saw today, where the market rallied super hard into a known CPI soft print. We're going to see the same thing, I think, play out into the first rate cut in September. So I wouldn't be bearish here. Could we consolidate some of this move that we just had in the market? Sure. And maybe that extends for a week or two to consolidate, but we're going to start seeing this push, I think, all the way up into that first rate cut. So keep an eye on that September meeting date, because I think that's where ultimately we're headed and could potentially top this market out.
Yeah, look at small caps pop today. So that was the thing I'm looking for. The Mag 7 struggled today because they had such a big day yesterday, but the small caps popped because they're the ones that are feeling the biggest pinch, with higher interest rates. So everything's coming together as we expect. You have to just keep an eye on things. Your bell cow is going to be definitely NVIDIA. You have to watch what they're going to do with NVIDIA because that's what's carrying the indexes. I'd watch energy and I'd watch bonds. And so just watch those correlations. And if it does what we think it's going to do, bonds are going to go up, energy is going to go up, NVIDIA is going to go up. That first rate cut happens, energy is going to go down, NVIDIA is going to go down, and bonds are going to go up. So just keep that in mind. And September is a perfect time for them to start that process because that's the end of that begins the shoulder season for energy too, Phil. And it begins the nasty grams for the market for September and October. And we know volatility is going to pick up looking at the volatility curve going into the election. And so you're not going to have a good guy with them shorting volatility in September and October either. So it's going to be a wild, wild, wild couple months. And you're just going to have to watch the bellwether sectors and to see if they keep performing. And if something doesn't smell right, it's okay to sell, and just keep an eye on things because I don't think how much this market can really go higher from an index standpoint. Another 700-800 points maybe. And then I think this thing's going to top out. Then, Katie bar the door. So you guys better start thinking about what things look like in a recession to you. And you have now 6 to 10 weeks to get your act together and get positioned for that. And we'll start talking more and more on these podcasts on how you can do that with these pair trades and some of these defensive trades that you can just sit back and relax because the market will do the work for you. And so stay tuned to that. Check us out, tradelikeagenius.com. Get in the rooms with us, and we'll give you guidance day by day as we progress into the election.
Take care, guys.
Tradgenius.